Hi everyone, let's have a look at my low time frame scenarios, including potential trading setup, starting with the overall scenario where we are looking for a three-wave structure in either a wave A, wave W, B or X, and then eventually C or Y. Inside this more corrective structure over here, we are then looking for a three-wave structure in another W, X, Y. And for me, currently, it's the only way to really count this structure over here, where this is then a three-wave structure in a zigzag, which then is a W. Then we have a double zigzag in this wave X, followed by an expanding flat ABC in then a wave Y. Because this structure over here looks to be a five-wave move to the downside in a 1, 2, 3, 4, 5, an impulsive move, where also the highest volume over here was in a wave 3, which is very nice. That's exactly what you want to see. And for me, it makes currently most sense that this is a five-wave structure in an ABC, so a corrective structure after which you then expect more upside. If this is a wave A or a wave 1, you eventually expect more downside, and the invalidation for this being a wave A or a wave 1 is taking the highs over here at about 30K. So that is something to look out for sure. Another thing that is important to know is at least that we have some bullish divergences going on. Bullish divergences between the low over here and the higher low that price has created. And the main target for bullish divergences is always the high that is between the two lows, which currently is this one over here at 30K. So that is definitely an interesting target, besides many other confluences resting above these highs, which I will show later. If we then zoom in to this structure over here, and I show you my bullish and bearish count, basically, we have then starting the bullish count, let's go to the 15-minute, a wave 1, 2, and then eventually we expect an impulse to the upside. In this then being a 1, 2, 3, 4, 5, for then a wave 1, followed by a three-wave correction, in then a wave 2, for then eventually more upside in a wave 3. Now the correction could already be finished over here for then continuation to the upside, or potentially a leg to the downside, another one, a final one before upside. Of course, both are possible, no problem, but in this scenario we simply expect this to be a wave 1, followed by a corrective wave 2, and then eventually more upside in a wave 3, 4, 5, which then I would like and prefer price to actually go to the blue target box over here, sitting between 30.2K and 30.4K. Now I mentioned this target area actually in my morning update, because in my morning update I mentioned that we have a daily over here at 28K, and we also have the range over here, this range, with a range value area high, the point of control, and the value area low. So I mentioned this is for me definitely an area of confluence and potentially an interesting area, of course, and we have to wait and see what price does when it is reaching this area. Now we also had the golden pocket over here in this area, taken from the low to the high of wave 1, which is very nice, some additional confluence. And as it stands now, price is bouncing on the range value area high with 2 wicks, as you can see over here. So twice we wicked on top of the value area high. Price is now moving to the upside. Now, if it is going to move to the downside, I would expect it to hit the point of control. But of course, it already hit the target area, my blue target box over here, for potentially more upside. That's of course something we have to wait and see. But in this particular scenario, we at least expect this to be a wave 3 to the upside. And if we quickly take a measurement of a potential wave 3, so we take the trend-based fib extension from the low of 1 to the high of wave 1, 2, for now the low of wave 2, right, that we have on the chart, and we put on the wave 3 targets, you can see that the 1.618, which is a minimum target usually for a wave 3, is currently resting at about 30.1K, which is quite nice because it is also above these highs. So that means that price would at least take the highs over here, for only that being then a wave 3. So wave 3 goes up here, then eventually you have a wave 4, and then expect another wave 5 to the upside, where the bigger scenario, if this is going to be the case, this is going to be more of an ABC structure, which this then being a 5-wave move in an A, then we have a 3-wave structure in a B, and then this is going to be an impulse in a 1, 2, 3, 4, 5 for then a wave C. Now we also have another scenario, which then of course is the WXY, which basically means that this is going to be a 3-wave structure eventually, right? Now if we go to the more bearish scenario, it still has upside in this case, but this then is an ABC. So what we are looking for then is this to be a 5-wave move in a wave A, followed by a 3-wave move in a wave B, and then eventually looking for a move to the upside in a wave C, where the target for a wave C is more commonly between the 1 the 1-to-1 and the 1.236, which as you can see is right here. So this is the most common target for a wave C, which is below this high over here. Now, this ABC can then be the first structure, and then a corrective 3-wave, and then another 3-wave to the upside, which then would give us the higher time frame wave Y, in this then being a wave Y before then downside eventually. Or this is an ABC for then more downside if this impulsive structure is indeed a wave A or a wave 1, as I mentioned at the beginning of my video. So if this is a wave A or a wave 1, you don't want to see price going above this high over here. Now, then you, of course, after a 5-wave move, you want to see a 3-wave structure and then continuation to the downside, right? That's what you want to see. So it's a little bit of a mix over here with the bearish scenario. If this is going to be a 3-wave structure, it can be all part of potentially a wave Y, which then is, let me actually show it, remove the brush, which then is over here a wave A or W, X or B, and then continuation in a Y or C, which is then a 3-wave structure in this wave Y, because a wave Y has to be a 3-wave structure before then eventually continuation to the downside. So we have to wait and see, of course, how price is going to develop. The most bearish scenario, which I don't have a count because I just wanted to mention it, is that this is a 5-wave move to the downside. This was the corrective, some sort of a 3-wave structure over here, and now we find continuation to the downside. That is not preferred. The preferred scenarios are towards the upside, in my opinion. But I do think it is important to at least mention it because, you know, YouTube. So I think that is important. Also, of course, the potential trading scenarios, by the way, that I show over here. Entry was then at the golden pocket area, stop loss invalidation between below the low, looking for upside. Trading scenarios are educational. You know how it goes, right? We're on YouTube. I'm not a financial advisor. Now, if you look and zoom out a little bit at the 1-hour time frame, what we've been looking for over here is this to be a 5-wave move and then a wave A, followed by then this corrective structure as mentioned already in a WXY or an ABC, for then looking more for more upside, where the 1-to-1 of this A, B, and then wave C as it stands now. If this is the low of wave B, actually, so let me put this over here. If this is the low of wave B and we are looking for an impulsive structure in the wave C, then the 1-to-1 is actually quite high. It's all the way over here at 30.7K above the target box. But the most common target for a wave C is the 1-to-1 and then also the 1.236. But the 1.236 is above the invalidation at 31K, because if this is a 5-wave move to the downside and this is a corrective structure before continuation, you don't want to see price take this high, because then this ABC is invalidated. Now, we did have the potential long scenario over here in this area. Also with the bullish divergences, that is pretty interesting, where the main target is going to be the highs over here. We also have some highs, a double top over here. We have another bit of liquidity over here. So that's definitely an interesting area, as well as the target box, of course, for then a potential short scenario. And that kind of depends on how quick, like if price is going to move to the upside, it kind of depends how quickly it will do so. If it goes up over here with high amount of volume, because don't forget, we still have news coming today at 8 p.m. Central East European time. Basically in an hour, we got the FOMC statement and some other stuff going on and a press conference. So volatility might kick in. And if price is going to just push to the upside in very, very high volume, this short over here, of course, is not a good idea. Make sure you have a plan, strategy, entry requirements, everything you need to trade sensibly, and wait patiently to see what you want to see before entering. So the potential setup is entering a short, stop loss above, moving to the downside. But of course, if price is going to push massively, just, you know, for your own sake, I would not recommend it. No financial advice. You do you, of course, depending on what is going to happen in this area over here. This might be a good or a bad scenario, of course, bad trading setup. Because the other scenario that we have is if price is going to push through that resistance with volume, then we can have this as a 3-wave structure over here, followed then by an ABC 3-wave structure, where the target is going to be between the 1.236 and the 1.38, where we also have the 2022 range highs for a liquidity grab, before then over here a wave C to the downside. So then we have an A, B expanding flat, and then eventually an impulse to the downside in the wave C, where the entry somewhere around the 2022 range highs, stop loss above the 1.618, for then a move to the downside. No financial advice, but this could be then a potential setup, right? So this is is what I'm looking for right now. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.